Hello? Okay, it's working now. Amazing. Okay, I know we're literally in between you and lunch, so please, stay with us. We do not want to be discussing this to an empty room. Great to see everyone here. We're going to be discussing everything from like fintech and payments trends on the African continent. Really excited about this panel. Would love to kick it off. First off, with just a quick introduction of the panelists, and then we'll dive deep in. All right, over to you.
Hey everyone, my name is Saruni Maina. As I was introduced, I'm an AVP at Flutterwave, born and raised in Nairobi, Kenya. I think I'll keep it short.
Hi, my name is Didi. I lead corporate affairs at Moniepoint, a company that tries to help provide financial services for underserved businesses and their customers. Thank
you. Yeah, hi everyone. I'm Solanke. I head FinTech and banks, investment banking origination for Absa. Absa, as you know, is a Pan-African bank, probably banks many of you. So that's me. And some of my colleagues are in the audience. James, I see James over there. So make sure I say hi to James at some point. Good to meet you all.
Hi everyone, my name is Shay Hamilton. I'm the CEO of a fintech called Tola Mobile. We connect up to all the mobile wallets across sub-Saharan Africa and provide a single API for merchants to transact with the consumers of those wallets. I'm from Ireland, but we have our team here in Kenya and Tanzania as well.
Amazing. So listen, 2024 was a pretty wild year, right? Everything from ultimately looking at wider payment infrastructures and integration, mobile money, stable coins, AI, M&A activity, right? And I think there's a lot to discuss also around regulation. But what I would really like to understand a little bit more in terms of where do you see 2025 as kind of being the key trends in the market? So maybe we can kick it off with Saruni.
As a Kenyan, I think what I'm most excited about is our crypto regulations finally coming to life, right? And anyone playing in the crypto space knows how exciting this is. It might not be 100% what we want, but I think it's a very good step towards that. We've seen what regulation within this space has done in South Africa, now in Nigeria. Busha just the other day announced that they were finally given their license, and they can go hard now in the market. And we know the kind of volumes that the Kenya market actually pushes within the crypto space. So you can imagine such a validation from the central bank and other regulators saying that, hey, now we recognize what crypto is and you can move forward with that. So I think on a personal level, very excited to see this actually come to life. And I know it will be a game changer for the whole region.
Amazing. We'll definitely talk more about that in the segment. And Didi, what about from your point of view?
Unfortunately, mine is somewhat negative. So the more we have a lot of improvements with regards to AI, and what this means is bad actors have also improved. So bad actors know how to bypass a lot of identity checks, and they just know how to bypass things better. And what this means for a company like us that serves underserved individuals is we have to find better ways and more ways to protect our users. You have to find ways to ensure that they're not looking at something that looks like us, but because it's very well done, they fall for it. And so it's a lot of work around just protecting our system from fraudsters and other bad actors.
Amazing. And so, from your perspective?
Sure. So look, I think on our side, because we sit within investment banking, and we work with a number of clients across many markets. So the type of trends that we'll be expecting to pick up in 2025, one of them would be more M&A activity. Last year was very busy from an M&A perspective across the continent, largely led by tech companies. We expect those trends to continue in 2025, and hopefully we can support some of the entities on this panel in such initiatives. The second dynamic is on the capital raising side, whether that's equity or debt. We came into this year expecting, last year we saw global interest rates continue to decline. As things stand, the dollar is looking like it's going to be stronger, which unfortunately has somewhat negative implications for our currencies. So that could also have net fallback effect for capital raising dynamics on the continent. But on the positive side, quite a number of Africa dedicated funds have raised dry powder. Okay, so there's money to be spent. Okay, so this year, hopefully, there's more development on the capital raising side. So hopefully that trajectory continues. But finally, I also think that from an IPO perspective, things are also looking up. Okay, so touch wood, something happens in 2025. Okay.
Hope so as well. Okay, and what about you, Shay?
Well, from my perspective, we've spent the last couple of years putting the payment rails in place across the continent. And about 2 years ago, we saw real growth commence from a merchant payments perspective. And I fully expect to see the continuing growth of merchant payments across the continent. I think there's a real e-commerce wave coming. It's already started, has done for the last couple of years, but I think it hasn't reached its potential. And I think it's going to continue to grow, and I think that's very exciting for not just us, but everybody else that's transacting across the continent.
And I think that leads us nicely into really discussing more around payment infrastructure and how payment infrastructures can help underserved communities, right? So Didi, I know you have a very interesting perspective on that as well. So would love to hear more in terms of how you see payment infrastructures, play a role here.
Thank you. I think we like to look at things from a point of view of the consumer. So first is, what do they want? How do we reach them? And how do we earn their trust? And thinking about that, then the question is, what do they want? They want payments at the speed of light, at the speed of cash. That's how I like to think about it, because cash is still king, and cash is instant, cash is reliable. And then you start thinking, how do we reach them? And then how do we earn their trust in that process? How do you ensure that your service is as reliable as cash and it's as quick as cash? And that's what we're thinking about here. It's building infrastructures that can help close that gap and ensure that people continuously switch to some form of digital payment. We're seeing that in markets and in a lot of places, cash is still super prevalent. And how do we ensure that we are giving them services that would make them say, hey, and how do we reduce the cost of serving of e-payments as well? Because there are a lot of duties involved. You're paying commissions, you're paying whatever. How do we ensure that that is reduced so that more people convert? And if they convert, then you're able to serve them and move them away from cash. And that's how we're thinking about it. What do they want? How do we reach them? And how do we earn their trust as well?
And would love to get Shay's view on this as well, right? Being from a more like a mobile wallet and mobile money perspective, right? How does that integration happen across, again, the continent, and how can that really tap into, getting more underserved communities as well as engaged?
I mean, mobile money has been fantastic for the continent. We hear a lot about the real-time payments initiatives from a banking perspective, but it's inherent in mobile money. It is real time, so that's fantastic. But one of the challenges with mobile money is that the various mobile money systems are fragmented. There is a fragmented landscape out there, and for merchants that want to transact with their consumers, there's real effort involved in having to connect up to each and every one of the mobile money systems across the continent. Even in a single region, it's challenging. So from our perspective, there's certainly opportunity there. I mean, we remove that complexity for the merchant. But I think greater interoperability and greater partnerships between the mobile money operators and the banks will lead to new services. We're already seeing some that will be a benefit to the consumers across the continent.
I mean, Soji, from your own perspective, right, thinking more around like mobile operators and how, again, that fits into the kind of banking landscape, where do you see some of the synergies there?
The way I like to think about it is the mobile money companies need the banks, and the banks also need the mobile money companies, because the mobile money companies need somewhere to store the cash. The cash needs to sit somewhere. So there will always be a role for banks, even as the mobile money companies, whether that's telco-led or private-led, like companies like Moniepoint. Okay, so there will always be a role for banks. Now, what is happening is there's increasing disintermediation around who owns the customer or the merchant relationship. Okay, and what that also means is when you think about financial services, for example, provided by large banks or even smaller banks, for example, what's basically happening is financial technology companies are building solutions at the last mile, that banks historically have tried to, sometimes working also with financial technology companies to solve for. Okay, so I think both parties will continue working together as time goes on. One party might have a leg up in one area or the other, but every now and then you always find out that the banks are still involved, even if it comes to provision of financing to those consumers or merchants. Banks will always continue to have a role. Okay, but I think what's happening is the more innovative companies are coming in at that front end and owning that relationship with the consumers or merchants.
And Saruni, how do you feel crypto fits into this space, right? When it comes to building payment infrastructure?
I think it's a bit of a complicated kind of situation, right? Because on one hand, we have the crypto enthusiasts who believe that crypto solves every kind of money movement problem. And then on the other hand, we have what I would call traditionalists in the space. We have the banks, the mobile wallets, M-Pesa and the likes, the regulators, who are looking at it as, this is hot air that will just be passing. But as we've seen recently, there's been a lot of adoption in the industry. And one of the biggest use cases so far has been the stable coins and cross-border transactions. At the onset of crypto in itself, when Bitcoin used to be Bitcoin and the Bitcoin millionaires were being made, right? It used to be this thing that almost looks like a Ponzi scheme, whereby your aim is to buy low and sell high, but there wasn't any real utility. But now we are getting to a point whereby even banks themselves, I know of a couple of banks in South Africa who are looking into the crypto space because there's now utility for it, whether it's storage of value, especially with the fiat-backed kind of crypto, the stables. And there's also value in terms of the fast money movement. If you are trying to get money out of Kenya to, for example, make a purchase in China, probably crypto is the fastest way for you to do it. You can find a provider locally who will convert your Kenya shillings to USDC, USDT, and you're able to pay your supplier. And that happens within the same day, as opposed to sending with your bank via SWIFT, takes 3 to 4 days. So I think the power of utility is what we are now experiencing, and that will be the game changer.
I love that enthusiasm. So I guess, it's not all rosy, and we know that. Didi, you spoke a little bit in terms of the challenges are growing, right? So maybe elaborate a little bit more in terms of also how, even with this evolution of payments infrastructure and even more real-time payment systems, and I'm sure you're seeing that too, Shay, on the mobile money side of things, but what challenges are really being presented, right, in the fintech world when it comes to more attackers or just more vulnerabilities?
Okay, so first is, as we work to build KYC systems and as we work to build, there are lots of identity management players here, we are seeing that fraudsters are increasingly able to bypass these things, increasingly able to bypass. So you have to build at the speed of these people as well. And it's a huge challenge because as a financial services player, fundamentally your goal is, I want to help people save, invest, manage their money in some way or the other, and you do not want them to lose money. So half the time, I'll tell you one thing that people keep falling for. They go on Instagram, they go on the internet, someone advertises food, they try to buy food, the person blocks them, right? The person disappears. And in that case, I've warned you, you shouldn't do that. But still, you're my customer, so I have to find ways to protect you, and I have to constantly find ways to protect customers from all of that. So at the heart of it, we're trying to do a lot of training around this, a lot of education. Please do not give your passwords, but please do not buy things on the internet. I keep saying, please don't buy food on Instagram. Don't do that. And really just helping them. There's a big problem we also see in Nigeria right now, which is it's people selling their data, selling their entire banking data to other people. And so I go to you and I say, hey, please go to the bank, register for me, use this device, and when you're done, I'll give you this amount. And people are doing this, but they're doing this because they need the money as well. How do I get to a point and let you see that this is wrong? Do not do this. Because what all happens is you become a mule account. People have multiple accounts. Someone hacks something. The money goes to 5,000 accounts. And then you're one of them. But you had zero involvement in what your only involvement was selling your identity. So there's a lot of identity sales happening right now. And we're trying, if anyone has ideas, please let me know. But we're trying to educate as much as possible and just keep protecting them. What that means is fintechs are not as easy to access as they were initially, which is a bit sad because the idea is I want to provide this service to you really easily. But with so much ease comes the bad actors. So we're trying to find some balance and just protect users as much as possible. Thank you.
Yeah, that makes sense. And I mean, there's always a saying in tech that as the tech gets better, also the attackers get better, right? They're using the same methods and the same tools or applications. So at the end of the day, everything needs to work in parallel. I mean, Shay, from your perspective, right? Like, what challenges have you seen in this space? You know, how does it affect ultimately, you know, the space that you're working in?
So I guess I'm going to flip it from a negative to a positive. Maybe I'm an eternal optimist, but I don't think you should discount the success of the inbuilt mechanisms of mobile money. The Western world has, for a long time, been grappling with fraud on card and whatever else. And now two-factor authentication and measures like that are being introduced and have been introduced over the last number of years. And that's been built into mobile money from day one. So yes, someone can take my phone number and they can use it, but if they want to take money off me, I'm going to have to put in my PIN. I'm going to get a push to my phone and I'm going to have to put in my PIN. If I don't recognize it, I don't have to do it. I absolutely love mobile money. When I'm back home, nobody can understand what I'm talking about when I tell them what's going on in Africa. I mean, if I'm on a website and I want to purchase something, I'm far more comfortable if I'm putting in my phone number than if I'm putting in a card. Technology has evolved to try and make it easy for people to put in card data because the card numbers are so long. But everybody knows their phone number, and there is inbuilt security in that. So for me, don't put your PIN in if you haven't ordered whatever you're being told you're being charged for.
Yeah, and I think that aligns with Didi's point, right, in terms of like, there's also a wider aspect of like needing to educate the consumer, right, and being able to protect that. I mean, crypto enthusiasts here, right, stablecoin, there's, I guess, a lot of kind of negative connotation in that space, but what's your point of view, and also what are the challenges that you perceive here?
I'm actually glad that Didi didn't mention that one of the biggest scams are always around crypto space, right? You know, we saw the other day Trump launched a meme coin and he raised a lot of money. And then an incident close to home is that our Directorate of Criminal Investigation, someone managed to hack their account, launch a meme coin through them, and now there's this whole investigation going around. So I think one of the biggest challenges in the space, and this is not just crypto, right? The fintechs in the room, and there's no end to them, will tell you, Moniepoint as well. You know, we face these kind of challenges where customers come back to you and they say, oh, I paid for this product through your platform, so you need to pay me back because they didn't deliver. As Didi said, someone sells you food on Instagram, right? And they're supposed to deliver the food, they don't. But because they probably used a Moniepoint link, a Flutterwave link, you now come to us and you're like, I need my money back. And to Didi's point, there's a lot of challenge on the fintech side, because now we have to come up with creative ideas. We've seen banks, especially within the African continent. How many of you have randomly received text messages, especially towards the weekend, where the bank is telling you, please don't give your PIN to anyone. We are not the ones calling you to ask for your PIN. And the weakest link to security is always the customer, because we are so gullible. And now because of, I would say, the increase in lack of jobs, the increase in poverty, people are looking for ways to make money. If someone comes and tells me that if I give you my ID number, you're going to give me $1,000, it's very tempting, right? We could speak from a point of privilege and say, okay, I can make that money elsewhere, But imagine someone who doesn't have ways to make that $1,000. And for a PIN number or for an ID number, to them, they don't see the risk of it. They're looking at the opportunity that is right now. And I think that's one of the biggest risk factors that currently exist.
Very, very interesting. I mean, Soji, from, let's say, a non-kind of retail or a consumer-focused perspective, like what challenges do you perceive currently kind of in the market, especially from a banking perspective?
So I would say that I think you spoke earlier on about real-time payments. So real-time payments infrastructure also means that fraud happens at the speed of light. So things are happening much quicker. The one thing I would like to see more of is probably, so for example, in Nigeria, there's a lot of usage of POS devices for merchant acceptance. Okay, how can we evolve from that box POS device to leveraging more of, let's say, phone device for merchant acceptance?
So do people want receipts?
They want receipts. So that's for you to solve for. Huh? So how can we maybe see more of that? And I think in some markets like South Africa, that's picking up. Nigeria, maybe less so. QR codes, I think NIBS announced something quite recently, trying to standardize QR codes for merchant acceptance. There's been a lot of efforts by, MasterCard, Visa. Again, I saw Melanie in the audience earlier on. Yeah, so there's been a lot of efforts by them to try to introduce QR codes into many of our markets. But I think these things also require more standardization, okay, because when you have too many players introducing multiple types of codes, it sort of creates fragmentation for the merchants and also the banks ultimately. So I think, there's more solutions and innovations happening. And I think some of the players that are driving that are some of the players you have on this panel. So, yeah.
So I guess as we think about that, clearly there's a lot of challenges in the market, but there's also much more, I guess, collaboration as well. So how do you feel like that, collaborating across like fintech and banks and mobile money operators, how can you help shape the policy and regulation in order to make a safer, I guess, financial services infrastructure for the continent? I guess, Saruni, maybe we kick it off with you.
Okay, I think maybe I'll use an example of an opportunity-based kind of collaboration, right? So Kenya doesn't really have a regulator-led instant payment system. We have PesaLink, which is by the Bankers Association. A lot of people don't actually know that. So it's not by the regulator. So the other day, the regulator announces interest that they want to build their own instant payment system, essentially to match what Nigeria has. And I really envy Nigeria for this. And many other countries, India as an example. And suddenly, we see two main players in the payment system come and want now to collaborate. We see M-Pesa and PesaLink themselves. And they're like, hey, CBK, hold up. We have these tools. We can now play nice together. We can work together. You don't need to build your own thing. And the reason for this is, let's be honest, they saw that the bread was literally being taken from them, right? Because M-Pesa will charge you to move money. PesaLink will charge you to move money. But chances are CBK is not going to charge you to move money. So essentially, the opportunity here for the customers or for the users was that you could have free money transfer to anyone, anywhere within the country, and it would be instantaneous. And then here comes the predominant players, and they're like, before this, they didn't want to talk to each other. You couldn't use PesaLink to transfer to M-Pesa, and you couldn't use M-Pesa to transfer to PesaLink. But now they see that, okay, so CBK is going to be a player, is going to essentially be a competitor, and now they're interested in working together. It might end up being a good thing for the whole industry. We are yet to see that. But I think I found that as a very interesting opportunity-led kind of collaboration, where now we are being forced to talk to each other, work with each other, just because there's an external quote-unquote threat that threatens both of us. So eventually we have to talk to each other. And we see this the same even with fintech. When there's fraud, a few years back, we saw a lot of fintechs in Nigeria come together to tackle fraud. Because if an account is flagged on, let's say, Cheaper Cash's wallet, and we have Redness also who have a wallet in the country, you want to flag the same person. And these kind of collaborations come up due to such kind of opportunities, whether positive or negative. So I think we'll see a lot more of that coming up, even as we move forward towards the year.
Shay, as an orchestrator, right, you're sitting really in the middle. How do you feel that, the collaboration in this angle, especially around kind of policy and regulation, can add value?
Well, regulation is a dirty word, but it's absolutely critical and it's vital. From the regulator's perspective, I mean, I think consumer protection is paramount, as well as monetary policy protection for various countries. One of the things that we see, which is, I'm certain, I've been on the stand all morning, but I'm sure this has come up, and if it hasn't, it will come up, are the challenges around cross-border payments and moving money out from one region to another. The technology exists. We've heard about the guys about stablecoin and things like that. I mean, it's there, but the regulation hasn't kept up with the technology. And there are challenges because you have to protect your monetary policy. You have to protect the consumer. Right now, we've had challenges in some regions in customers paying us when there's been FX controls enforced on our customers and they're unable to pay us into our bank accounts back in Ireland. Stablecoin would be great. Other crypto would be great, but we wouldn't go near it at this point in time because the regulation isn't there. There's uncertainty, and we're likely to have our bank accounts back home shut down. So the tech is there. The regulation has to come, and the sooner it comes, the better, but it has to be the right regulation because it should enable the solutions from all the various companies that exist today. They are here, and you can do it. So you can overcome the problems and the challenges with the right regulation. There's no problem with the tech. The companies are all here, and most of them are here today and around to deliver the various solutions. So that would be my perspective. Regulation has to start to speed up, to look after the country's policies, but also the consumer. And then once the consumer has trust, and that's what they have with mobile money, if they have trust in a solution, they will use it.
Soji, from a kind of M&A perspective, right? I mean, where do you see kind of the synergies there in collaboration? Have you seen any specific kind of trends and on the M&A side where you're seeing, again, more close collaboration?
Maybe the easiest way to answer that question would be, maybe let me use South Africa as a case study. When you look at the banking sector in South Africa, historically we've always had the big 6 banks. But over the last 5+ years, there's now a couple of digital banks that are gaining scale and momentum in the South African market. And these entities are not necessarily owned by banking entities. They are owned by insurers, for example. In South Africa has also launched its real-time payment infrastructure. The central bank there is also looking to take a more meaningful stake in the real-time payment infrastructure and enabling fintech companies to be able to connect directly to the real-time rails. What this then ultimately means is that you end up in a market where just like what's happening in Nigeria, the providers of financial services at the last mile starts to evolve more meaningfully beyond just banks. Suddenly it could be a fintech-led entity. It could be the financial services arm of a retailer, for example. Some of the digital banks we are seeing in South Africa are actually owned by insurance companies. Okay, so suddenly because of the advancement in technology and also the speed of the infrastructure layer at the middle, okay, now you're having the entities that are able to provide financial services at the last mile, that the picture there is changing from what we've seen over the last, 20+ years. Okay, and I think the implications of all of this is that, that intersection of financial services will continue over time. And I think it just makes it for a very dynamic future. Your question was more around the M&A perspective. As all these entities try to build, they can't all build organically. Okay, so there are certain product lines where they will need to consider M&A. So for example, you've launched a digital bank. You're providing consumer financial services. But how do you roll out SME banking, for example? Do you consider acquiring an SME player in such a market? Let's say you want to be able to offer merchant acquiring, offline or online. You can choose to build it organically, but you could also look at an existing player in the market and acquire such a player and embed it into your platform. So I think a range of these things are happening, but I think more generally, the M&A trend on the continent, the buyers have been largely tech companies themselves. We have not seen too many incumbents, whether that's telcos or big banks, or even insurance companies, acquire any meaningful stake in a tech company. most times what you see is, they write a few checks here and there, whether it's grants or they participate in a funding round. But in terms of them playing the role of a buyer of last resort, in Africa, that's been very few and far between. But quite frankly, the trend we are seeing in Africa is not too dissimilar from what we are seeing in the rest of the world. Okay, big banks, even in global markets, they cherry pick where they play. And I think same thing in Africa from that perspective as well.
Makes a lot of sense. And Didi, I mean, how do you see kind of collaboration as, a tool in order to drive more discussion around regulation and policy building, specifically also around consumer protection?
Right. I think, and it's something I do on a day-to-day now, we're trying to ensure everybody listens to each other. There are multiple stakeholders, right? The government is trying to ensure there's a stable economy. The regulators are trying to ensure that consumers are protected. You are trying to ensure that you make money and make some impact. Your competitors are trying to do the same. And so it's understanding and spending more time, and we find ourselves spending a lot more time with the regulator because you're on ground, you see what customers want, you're interacting with them, you see where the problems are. Very likely the regulator had come up with the policy many years ago when things were different. As consumer behavior is changing, how are you sending that information to them? How are you showing them that things are changing so that you can work together to come up with something else? So it's a lot around spending time and listening. Tech companies get into this bubble where you try to build in a void and you forget that you're building within a larger context of different players with different objectives. And that's what we're trying to do. Spend more time, understand that everyone has different objectives. This is a Venn diagram. Where do we all fit in? And how do we ensure that everybody's happy? Yeah, thank you.
So we have a bit more time left. And what I would really like to do is project ourselves in the future. It's 2026, February. Like, what has happened in the next year that you think is going to be really monumental shift, especially on the continent, right? Like, where do you think we're going to land in the next 12 months and why? So I don't know who wants to take that first.
Ladies first.
Nkiru, do you want to go? Do you want to try?
Okay, cool. I mean, listen, I think in the next 12 months, first of all, I do believe that we're going to have more stablecoin activity. I think for various reasons. One, because it is enabling real-time, payments, but that doesn't mean that it's going to be the only motion of it. I believe that everything needs to be an ecosystem and it needs to be integrated. So I believe every single part of that ecosystem is going to play an essential part of it, right? I think especially for the continent, there's too much fragmentation in terms of the spectrum as to where the consumer or business lies. That is not going to be just one system or one player, right? I do believe that in order to build the infrastructure for financial services that is going to take Africa to the next level is going to be based on absolute integration and collaboration. So that's kind of my take on it. In the next 12 months, we're going to see much more adoption of that.
Awesome. I'm the moderator now.
There you
Adesoji,
go.
do you want to go?
So I think a year from now, what I'll be paying more attention to, and also what I think would have happened by then, there would be more competition in terms of pricing on the acquiring side, which I expect would force the players on the acquiring side to think more about how they add more value to their clients, whether those are merchants or the customers of the merchants. Okay, so in markets like Nigeria, that competition, that pricing pressure is coming from regulators, but also competition. Okay, in markets like South Africa, it's very much competition driven. Okay, so what that also means is if you've been significantly focused on the acquiring fee, you need to think very much about how do you earn more income, whether that's from lending, okay, or playing on the issuing side to capture more of the interchange fee as opposed to just the acquiring fee. So I think it's going to force players to move much quicker to thinking about the next phase of evolution of their business beyond what they've done or relied on for the last many years.
Shay.
So I think in 12 months' time, I think cash is still used extensively across the continent. So there is still room for growth and quite a bit of growth in terms of digitizing some of those cash payments. So I think we're going to see some of that happen. As I said earlier, I think merchant payments and e-commerce is going to continue to grow, and we're going to see that. In terms of collaboration, as you mentioned, I do think we're going to see partnerships and collaborations emerge in terms of the solutions that those partnerships and collaborations are aiming to solve and deliver to the market. I don't think they're going to be seen in 12 months in terms of trying to solve cross-border payments with crypto coins and things like that, because the control is not necessarily with the great companies that are operating in that space, but with regulation as well, and it can be a slower process. So I think the partnerships will emerge, but the solutions will follow. But the solutions will take more than 12 months, I think.
I agree. Saruni?
Yeah, I think we're going to see a lot more regulator collaboration, especially regional, right? You find like the East African regulators probably are going to want to work together more. We've already seen some of it happening, porting of licenses. If both regulators believe in the same thing, stand for the same thing, instead of having players seek licenses in both markets, you can probably say if you're regulated in Kenya, potentially you can see this kind of activities in Uganda, in Tanzania, and so on and so forth. So I think my prediction is that by the time we are getting to 2026, we're going to see a lot more of this, which will definitely make it easier for financial institutions to do business within the continent.
I love it. Very positive. So we have around 3 minutes left. So any questions from the audience?
They're hungry.
Clearly very hungry. All right, guys. Thank you so much. Really appreciate it. Any closing statements or words that anybody wanted to share before we close out? No?
If anybody wants to talk, we've got a stand outside. We're there for the rest of the day and tomorrow, so drop by and say hello.
Yeah, absolutely. If you want to do anything with Moniepoint, we're available to talk.
And if you want to work with the fintech that powers every other fintech, Flutterwave is in the house.
Wow, this is not a competition.
And clearly for Soji, if anyone's doing capital raising or is looking to acquire or do a merger, that's a really good contact to have. Amazing. Great. Thank you so much, everyone.